in Bitcoin, you couldn't make much money because there weren't big enough moves. And so it coaxes people to kind of this false sense of security where they over leverage. And then when you finally get that move, all of that leverage has to come off, which means the fall is bigger. And it creates this big move down because there's just not enough buyers there. And that's really, in my opinion, why you see these big moves, especially when you don't have a lot of volume or liquidity in the coin. The markets have remained resilient. I think the money in the system hasn't been sucked out as fast, even though the Fed's raising rates, there's a lot of money in there that keeps sloshing around. And I think overall it will happen. It's just a matter of how bad is it going to be. And then ultimately, I'm curious about inflation, right? Do we have a sticky 3%, which makes it very tricky for the Fed to come to the rescue? Or is inflation, do we import some deflation from China and then they can come out guns blazing and start printing? The first thing is, we came from a period where there was the least volatility in history. And one thing I remember you and I both saying is that when that happens, it's usually the precursor to a big move in Bitcoin, whether it was up or down. What do you think about, I think it was last Wednesday, we got the Fed minutes and they were surprisingly hawkish. I think the market got caught off a little off guard on that. And then this week, we know we have Jackson Hole where we're going to get a speech. So do you think, when we get that speech, are you anticipating a Federal Reserve Chair, Jerome Powell, to be saying, hey, I'm going to still have to raise rates another time this year? Or do you think he's going to kind of throw the market a bone and says, hey, it's a wait and see, I'm not 100% sure?
Bitcoin ETF impact. The potential introduction of Bitcoin ETFs by finance giants like BlackRock and Fidelity could reshape the crypto landscape, requiring adaptation from existing players. Regulatory compliance gives established finance firms an edge, leading to transformation within the industry. Crypto players transition. Crypto exchanges like Coinbase and Binance might shift roles to service providers for Wall Street institutions, embracing the evolving dynamics. As compliance and regulations gain prominence, the transformation becomes crucial to navigate the changing market. Crypto's civil liberty angle. Robert F. Kennedy Jr. highlights Bitcoin's role in preserving civil liberties, emphasizing its potential to empower individuals and protect financial freedom. Market moves. The SEC's delayed decision on Bitcoin ETFs triggered a significant sell-off, impacting Ethereum and other altcoins. Despite recent losses, Bitcoin rebounded above $26,000, aiming to consolidate after the weekend's declines. U.S. crypto developments. A spark of optimism arises in the U.S. crypto scene with potential approvals for an Ethereum ETF and Coinbase's futures trading. However, regulatory actions continue as the SEC charges an investment advisor for misleading disclosures related to client crypto assets. Now let's begin our enlightening discussion with Gareth Soloway.
The first thing is, we came from a period where there was the least volatility in history. And one thing I remember you and I both saying is that when that happens, it's usually the precursor to a big move in Bitcoin, whether it was up or down. I happen to believe it was down. I believe you were as well in that camp, just because, again, you've been in this period where we're up against major resistance and we're likely coming down. So the question is, what was the trigger of it? Was it the stock market? Was it we kind of heard that SpaceX might have been unloading Bitcoin and that kind of panicked. But one of the things I will say from a pure technical point is that when you break the support here at 28, and this is a level that I've had on the charts for a long, long time, in such a light volume environment, it creates kind of like a vacuum in that there's no bidders below, right? You can trigger a lot of stops, and it creates this big move down because there's just not enough buyers there. And that's really, in my opinion, why you see these big moves, especially when you don't have a lot of volume or liquidity in the coin. Now, the crazy thing about it is now that we've broke that trend line, the question is, do we hit 25, which was the BlackRock news low before we popped up on the spot ETF news? And then if that breaks, do we go to 20 and then eventually back to the lows? And I'd be curious to hear your take on this, because we saw altcoins, by the way, get hammered as well. I would just like to see, at least from my perspective of why I remain bearish, is that while the jobs data has remained strong, the underbelly of jobs is a lot more part-time work versus full-time. And that's been a trend that's been kind of escalating recently. And then I also think you have to take into account we're a global economy now and look at what's going on in China. And, it's another thing we haven't touched on, but China cut rates last night. But interestingly enough, and this is, I assumed that they would come out with, bazookas, but they actually cut rates less than the market anticipated, which I find fascinating because of all countries, they're the ones usually that want to do it the most. to stimulate growth in their country, especially with deflation, right? I mean, they have deflation. They don't have to worry about inflation right now. But I think, again, generally it's the jobs market that's the strong one. But I do see cracks emerging in that jobs number. The reason why you see a little bit of a dip in Bitcoin dominance is because people got very accustomed to there being no volatility in Bitcoin, which meant that they over leveraged, right? So you had over leveraging because in Bitcoin, you couldn't make much money because there weren't big enough moves. And so it coaxes people to kind of this false sense of security where they over leverage. And then when you finally get that move, all of that leverage has to come off, which means the fall is bigger. And I think that's kind of explains it. And I know also, at least on TradingView, they kind of did a few little odds and ends and changes, as well. But we digress. I've heard that a lot of the funds out there, and it's not necessarily that they're super bullish, right? It's that they have to chase the market. If you're a fund, you can't sit on the sidelines and watch the NASDAQ go up 20, 30%, right? So I have seen that, and I have read about that, how a lot of funds have been forced to go bullish, regardless of what their viewpoint is. And it does make me, believe it or not, something like that, I look at as a contrarian indicator, right? So once you get everyone bullish, or majority, that's more likely to be a bearish signal. Now, like you showed in that chart, we still have more bears than bulls, though. I'm one of those that I thought by late third, early fourth quarter, we'd be in recession. And David, I talked about that early. Now, I honestly think it's you got to push it out till late, last month of 2023 to first quarter of 2024. Just because, again, the markets have remained resilient. I think the money in the system hasn't been sucked out as fast, even though the Fed's raising rates, there's a lot of money in there that keeps sloshing around. And I think overall it will happen. It's just a matter of how bad is it going to be. And then ultimately, I'm curious about inflation, right? Do we have a sticky 3%, which makes it very tricky for the Fed to come to the rescue? Or is inflation, do we import some deflation from China and then they can come out guns blazing and start printing? And I think, to me, that's going to dictate the next 5 years, because if they can't stimulate and save the markets like they have in the past, then we could be in a period, and I'd love to hear your views on this, of everyone's so used to okay, we're in a bear market, but we'll be back in a bull within a year and, making new all-time highs within a few years. Is it possible that we get in this cycle of just kind of crappy markets for a longer period, like Brazil or China? I mean, China hasn't made a new high since 2009, right? And I think it's important to recognize the Fed, just like us, has mentioned that there's a lag effect on interest rates, right? So, 6 to 12 month lag. And so there's still a lot of hiking that's going to hit the market on a delay that the Fed hopefully is aware of. And that's why I kind of agree with you.
Don't forget to join us as we explore the unfolding events.
We're looking at a potential breakout here. And this was that chart that we talked about last week, where you have the high from October on the 10-year. And you're actually now moving a little bit above it. Now, what's so fascinating about this, and we're going multifaceted here, where you have a higher high being made on the yield versus the October high, which marked the low on the stock market. But the markets today are actually slightly positive. And I would just like to bring up this one stock right here is the culprit, right? We have, that's the NASDAQ. It's NVIDIA, right? So NVIDIA is just having a rock star day. We saw, I think, an upgrade today with a price target of $780 a share. And for me, I look at these type of events as topping signals. So it's, think back to in Bitcoin when everyone was saying, hey, by the end of November 2021, it'll be at 100,000, then 150, whatever it was going to be. And so when you start to get these analysts throwing out these kind of ridiculous price targets, to me, it's more of a warning sign than anything else. So I don't know if you guys have any thoughts on that, but it's really, it's remarkable, because in this environment, the dollar's been rallying since the open. That's usually bearish for equities. Yields we talked about, and yet the markets again are holding up because you have this one stock that's like a shining star. I looked at stats recently talking about the average car payment now is like $700+, which to me is mind blowing. You throw in, what a mortgage is if they're taking a mortgage now, and then inflation, right? What are they paying at the grocery store, at the gas pump? And we've seen gasoline prices starting to pop more recently again as well. So there's a lot of pressure. It's amazing the consumer has held up as well as it has, but I would dare say that there's probably still so much excess liquidity in the market that it just takes time to kind of wash out.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.